All right, welcome back, everyone. We are halfway through a really great conference today. Lots of fascinating companies presenting. We've got a few more. Please welcome our next presenter. We have Experian Holdings. It trades on the OTCQB under the symbol EXPFF, as well as on the TSX under the symbol EXP, and is the parent company of Experion Biotechnologies, Inc., a Health Canada licensed cultivator and processor of cannabis based in Mission, BC. Please welcome the CEO of Experion, Jarrett Melnick. Welcome, Jarrett.
Thanks, Anna. Hello, everyone, and welcome to today's Emerging Growth Conference. My name is Jarrett Melnick, and I'm the CEO of Experion Holdings. I've had the pleasure of being with Experion since its beginning and have been the Chief Executive Officer for a little over a year. For those who do not know us, we are a Canadian cannabis company that has accomplished a lot recently with a lot on the go, including a lot of emerging growth. So I'm excited to lead you through our company today. I want to describe why we're a little different, step through our recent operational and financial results, and explain why we feel now is a particular good time to invest in Experion. But before I do, just a reminder to everyone that today's presentation does contain forward-looking statements with respect to future events, and any such statements are subject to certain risk. For more information on this particular disclosure, please see Experion Holdings filings, which are available on SEDAR and our website. So with that out of the way, thank you everyone for joining, and I'm excited to get going. From a high level, our overall position or vision is to become a leader of premium branded cannabis products and offer a consistent, exceptional experience for our customers. Now, if you follow the cannabis industry, I'm sure you've heard that before, and it's actually the universal narrative for most cannabis companies. But the difference is we're actually executing on it. And we're accomplishing it because we become the best at scaling premium cannabis products and building premium brands. My goal today is I want to explain in more detail how exactly we're doing this, why this is important, and how it sets us apart. If I take just a quick step back, we launched our first product, which was a flower, as a single SKU in a single market 18 months ago. Fast forward to now, we have over 25 SKUs serving 7 provinces. And what was really exciting was our ability to launch and ultimately help define what premium flower is in our market. Due to the various marketing and advertising limitations in our Canadian market, we had to let the product speak for itself. And the results, well, we've created one of the fastest growing, in-demand premium brands in Canada called Citizen Stash. Since launching Citizen Stash, we've created so much demand, it has literally pulled us into new markets. It's pushed us into offering new products and opened new doors to new opportunities and helped us partner with the best in Canada. This is actually translated into revenue of an increase of 350% in 2020 over 2019, with a continual revenue increases over the last 5 consecutive quarters. As the numbers show, we are a growth company and just starting to unlock our growth potential. And we can grow quickly and continue to do so because of our aggregation and distribution model, which allows us to rapidly scale with virtually no capital deployment. Unlike our competitors who've invested millions, if not tens of millions in overcapacity, underfunded assets, that we can deploy our capital directly into inventory and scale quickly by taking advantage of the open capacity in the market. And I am going to talk specifically about that later in the presentation. I often think about what we've accomplished and what we've created. And of all the cannabis companies in Canada, how many would want what we have? Branded as a high quality premium product supplier, actively selling multiple products, creating multiple revenue streams, playing exclusively in the high-end premium market, established distribution network from coast to coast, representing thousands of retailers having access to our products, and having a fast-growing, popular demand, creating 5 consecutive growth quarters. So the answer is, who would want all that? It's everyone. It's Citizen Stash and Experion is in a very unique, exclusive position, and we're only starting to realize our potential. Further to that, I often discuss with bankers and investors in this industry, and their common questions now universally are, do you have a brand? Does that brand actually sell on the market? Do you have a following? Does it resonate with people? Can you scale, and will you make money? Again, Citizen Stash checks all the boxes. We're building a real company with a real brand, with real demand, with real financial results, and we're doing it better than our competition. So to end this slide with this title, that's why Experian. So who are we? Well, as mentioned, we're best known for Citizen Stash and our premium brand by building a company based on fundamental practices. Launch a quality product. You don't have to be first, just be the best. We're very specific on how we launch Citizen Stash, and we introduce ourselves as a premium player, and we exclusively play in the premium space. Therefore, we generate all of our revenues selling into the adult use market. Although there is an established medical market in Canada, we've chosen to focus on the recreational market as it's the fastest growing segment in Canada and is our accelerant to further expand our brand and maintain rapid growth. In fact, we now see those companies that started in medical, now selling off and divest out of that market and invest more into the recreational mainstream as they now recognize the same opportunities. But their problems and their challenges, they're now fighting for, trying to recreate or buy into the premium recognition with little success. I mean, you can't just become premium overnight. It's based on the right genetics, the right timing, the right craftsmanship. I've been in the industry for over 7 years, and premium products are created from a holistic experience, not just from a fancy package. So what else about us? Well, we are a fully licensed company located in Mission, BC, which is just outside of Vancouver. We have 10 acres of fully built out, not requiring us to finish any half-built facilities or fill idle space. In fact, if I was going to think back, we had close to over 100 harvests under our belt. And in that time, we have developed and successfully launched numerous first-to-market strains. We've never lost a crop. We've never had a product return. We have truly built a best-in-class facility and team. And as a result, we've created a launch platform to truly scale from here. As well, we were first licensed in the summer of 2017. That gives us over 3 years of operational experience. Now, that's important because it allows us to develop significant IP in our genetics and cultivation methods to consistently produce the premium flower, which we're having success on. We also scale differently using the open capacity in the market. That makes us an asset light and capital efficient company. And of course, as Anna mentioned, we are listed on the public exchanges under the Toronto Venture Exchange under EXP and on the OTCQB under the symbol EXPFF. Since the beginning of launching Experian, we were built on some core beliefs. First and foremost, we believed on the first day we launched Citizen Stash, we could have a significant market share in the premium cannabis space. A consumer survey conducted by Deloitte recently indicated there was no single brand associated with premium, leaving Citizen Stash to capture this opportunity, which is exactly what we're doing. As well, we believe flower will continue to be a strong staple within any legal cannabis market, and that premium products will be shielded from price pressures and capture more sales overall as the market mature and consumers become more sophisticated. In fact, we're already seeing this being demonstrated in more mature markets like California and Washington, where higher priced flower is taking larger share of total sales. And that's indicated on the graph on this slide. And that bodes really well with our business plan. We also understand when you use the word kind of craft, it can also be associated with smaller companies, boutique, small capacity that might come with various limitations. But we believe you define craft as a philosophy based on how you grow it, how you handle it, and how you offer your products. And you're not limited by size. In fact, I'm going to talk more in a bit how we're able to scale premium craft products without limitations, and it can be done. Being in the consumption retail industry, we also believe you must continuously innovate with new strains and products to keep the retail consumers interested. And Experian is already working on products for the second half of 2021 into 2022. And of course, we believe there continues to be a great opportunity in the cannabis market. We've seen our industry in 1 year double, and we expect it to continue to grow again this year. So being in a growing industry, that translates to a huge upside to active operating companies like Experian, especially with in-demand products. So what do we do? Well, at a macro level, our company operates on three core processes. We grow, we partner, process, and we distribute. So to give a little more color to each of those, for growing, our cultivation at our facility is used for three purposes. First, as a nursery to develop and continue to develop new premium strains and genetics, i.e., this is our R&D and how we create our own IP. Then second, we cultivate internally and perfect our IP and our flower for commercialization. And we actually generate our own revenues from our flower production. And third, we then accumulate and supply our genetics as starting materials to support our grow partners. So that's how, in a nutshell, what we do under our growing and our cultivation license. But we also partner. Our partnerships are important because that's the way we ultimately leverage and scale our flower and processing capacity. And our partners also co-manufacture our added value products for us. When it comes to processing and packaging, I think we're a little bit different as well. I think we're one of the only few companies that purposely licensed more processing and manufacturing space than cultivation. But that was important because it allows us now to look at and process all of our products that go to market and implement the oversight and the procedures to ensure absolute quality control and protect our brand on every product that goes out the door. Additionally, we package other added value products like concentrates and edibles to further drive revenues, but while we maintain an ultra low cost structure. And finally, and probably one of the most important, we have built up a national distribution network, currently servicing over 80% of all the provinces and territories, representing over 1,000 retail stores, and we expect to be in all the remaining markets within 2021. So I want to take a moment and go a little more in depth on our model and explain how it's allowing us to rapidly scale our production with essentially no capital expenditures in land building or equipment. So as mentioned, we've developed an end-to-end business model from seed to shelf, but leverage our capacity with contract farmers and co-farming relationships. So first, this is not a new concept. We're not reinventing the wheel. We're just one of the only ones using this model effectively. And we believe, due to the unlimited growth potential, coupled with our demand, our model has the potential to grow to a $100 million company quickly. Now, I say that because this model is not new to me. I have seen and worked with agricultural companies using this concept become billion-dollar companies throughout California. This is how big agriculture companies are built. And I see the same opportunity for Experian in the cannabis space. So just to boil it down, we own our IP or genetics. We license that to other growers or farmers that we've qualified. And I just want to emphasize, these are not anyone. These are qualified partners across Canada that have open capacity, and they want to do this for complementary or primary revenues. So we bring that product back, and if it meets our quality standards, we then process and distribute it under our brand. We find this system is the most capital efficient method to bring our company to profits quickly by using and leveraging what we have. Our advantage is not about owning, but it's controlling licensed space and cultivation and doing it without any capital investment. So think about that. By doing it, our cultivation costs become variable. We can ramp up or down inventory as needed without fixed costs. As well, we can pull on multiple levers, like layering different harvest schedules, optimizing production cycle time, change out new strews quickly, modify quantity. This allows us to pivot quicker if needed and get multiple products to market faster if you were just going to build this out yourselves. We leverage not only the space, but we leverage experience and adaptability. We find our model meets our customer needs. Gone were the days where our customers receive 100 kilograms dropped off at their door at one go. Now they want smaller, fresher batches to keep in cadence with their warehouse and their customer needs, which plays right into our strengths and what we have built. So maybe to further conceptualize this, we have currently 8 grow partners under contracts with an average of 4 cultivation rooms growing per partner. So in essence, that's 32 craft rooms. We can control harvest schedules, timing, type, weight, everything I just said. But because our success and our genetics, most of these partners want to double with us. And so what I mean by success and why do these grow partners want to partner with us? Because they have access to the best genetics. They actually get increased yields per square foot using our products. They have low failure rates using our products. They have a product in demand that they can produce and actually make money on. So that is why these guys want to do it and continue to do it with us. So our current partners want to double. That now lands us at 60 craft cultivation rooms we have under control. We have another 5 partners coming online with us with similar capacity. That brings our potential and our capacity to 100 rooms. I have more coming in every day, and so on and so on. Unlike virtually every producer in the market, we are not constrained by real estate or special purpose buildings. What I'm saying, we basically have unlimited supply, coupled with our genetics and our brand. That translates how we've cracked the code to scale craft premium flower with minimal capital. And that truly separates us in the best possible way from our producers and brands in the market. Explaining further maybe that advantage, if I was going to break down our revenue to date, as reported in our annual fiscal 2020 financials, we did $7.3 million in revenues. In my opinion, we would have to invest over $15 million in capital to create the infrastructure and the support needed to produce that level of products and revenues. Instead, we deployed that capital directly into inventory and therefore into the hands of our consumers. And within 30 days, we redeployed the capital again in 90 days. This is exceptional capital velocity and return on invested capital in the cannabis market, and allows us to further invest in brand marketing, shelf space, and create new products. This is how we get ahead quicker, outperform our competition, get to profits quicker, and continue to own the premium market. But the key to how this model works, we need to have a recognized brand in demand, and we're fortunate to have created Citizen Stash, not only as a demand brand, but as a top performing premium one. This was accomplished by being strategic on how we launched our product, namely, bringing first to market strains and ramping up distribution quickly for maximum brand exposure while ensuring a top quality experience. That has created numerous nominations for national awards and has created a loyal customer following. Maybe to demonstrate a little bit of our brand potential and our built up demand, we only entered the Ontario market, which is Canada's largest cannabis market, last fall. Within 3 months, out of 108 suppliers, we have already become a top 20 supplier, beating larger companies like Sundial in total sales and total volume. On top of that, Ontario and some of the larger exchanges, they're going through kind of a reset, and they're delisting hundreds of SKUs right now. The ones that aren't performing are getting kicked out the door. And they've executed this in the last couple of months. But Citizen Stash, we kept every SKU and we retained another 5 on top of that during this exercise. And those extra 5 will translate into future revenues in our coming quarters and throughout 2021. So to that end, we've extended our brand strategy to develop a brand platform of Citizen Stash products to leverage this equity. And to give an example, when we decided to launch our pre-roll, which was an all-flower premium product last year, we were told by our customers we were the only company in Canada that was asking for a higher price per gram for pre-rolls over our regular jarred flower. The market, it was getting saturated with pre-rolls as they're traditionally used, right, to get rid of unwanted flower and basically waste. So in the end, they decided to launch a premium Citizen Stash pre-roll at a premium. And within 6 months, we have sold over 300,000 pre-rolls within Canada with growing demand. Last month alone, last March, we were the 5th largest pre-roll supplier in the Ontario market, beating Aurora, beating Sundial, beating Organogram, and beating 7 Acres, which is a recent brand that just got purchased by Canopy for $400 million. Our products are winning. And more importantly, Citizen Stash actually helped redefine what is now premium categories in our product lineups. This was no different when we launched our edible, and this will be no different when we launch our concentrate line coming up soon. So how effective we are, ultimately is reflected and boils down to our financials. So here are some key results that have been achieved as reported in our latest financial year ending in the year 2020. Since we started driving our aggregation and distribution model a little over a year ago, we have increased revenues 366% ending 2020 when compared to 2019, landing at about 7.3 million in sales. We continue to grow every quarter, and our last Q4 was a 25% increase over Q3, which is now our 5th consecutive quarter. As mentioned, as we implement our model, we also quickly kind of rationalize costs in parallel. We prioritized efforts to generate revenues with high margins. And doing all that, we're actually bringing our expenses down every quarter, landing at a 43% decrease overall in expenses for 2020. So with these combined efforts, we've reported an increase of adjusted EBITDA of 4.1 million in 2020 compared to 2019, which is a 74% increase. So as the table shows on this slide, with increasing revenues, more streamlined operational costs, stronger pricing, we're demonstrating a clear path to profit over the next couple of quarters. There are only a handful of companies that can clearly demonstrate this through focused execution. I do encourage you, though, for more financial information, please visit our statements filed on SEDAR or go to our website. So as mentioned, Experian and Citizen Stash, we are well positioned to continue to grow over the coming years. So what are some key catalysts to look for? Well, namely, please watch for our next quarterly financial reports, as they ultimately provide our ability to acquire supply, meet demand, expand distribution, use our capital efficiently, and become profitable. As mentioned, we've already increased revenue 366% in 2020, landing around 7.3 million. So our revenue guidance for Q1, which is ending in February 2021, we expect between 3.7 and 4 million within that quarter, which is a 40 to 50% increase over our last quarter. This will be our 6th and largest consecutive quarter as we capture more market share. So other catalysts to look for and other growing opportunities, we're going to continue to expand our SKU lineup nationally, and we're going to launch a new product lineup, including concentrates, over the next 60 days. We're going to enter new markets, namely Quebec and the Maritimes. And as we grow, we're going to max out, which is a great achievement, but we're only just beginning. So look for us to expand maybe into a central hub to supply our larger Eastern markets directly. So why am I mentioning all these catalysts? Well, all these drive revenues. And as we know, a key metric for company valuations is revenue and EBITDA. With the Canadian cannabis market increasing 100% over 2019 to 2020, we expect to continue to grow in 2021, and our abilities to further increase our revenues in 2021 by multiples, we're putting Experian in a real position for a breakout year. So to kind of further that comment, our research has found what others are saying from some credible sources, that they suggest valuations of easily 4 to 5 times revenue as a metric. We've also found our closest competition and peers are trading at an average of 9 times their annualized revenue, as suggested on the table on this slide. Therefore, if you add just our top line revenue from our Q4 results and annualize them, and then compare that to our competitors' annualized, couple that with the market's offering, one can conclude that Experian's implied equity value is substantially undervalued. I do encourage you to kind of do your own research, but the data shows we believe Experian is behind our competitors from a market valuation perspective, and we intend to close that gap. We're just starting to raise our voice, get our message out, and we're amplifying our growth story through a series of campaigns this year. Now is probably one of the best times to have a good look at us and consider us. So kind of in closing, we're only one of the few companies that can capitalize in the premium market because of what we built. And we know there are big opportunities ahead of us. as we continue to grow Citizen Stash across the country. We've laid a path to be profitable in the near future with expectations of more growth in 2021. So if you're interested in a near-term profitable company with significant upside, with a track record of execution, I encourage you to keep watching us. I encourage you to tell your network. I encourage you to contact me. I'll be more than happy to explain why we think we're a good opportunity. And I think you're going to like what you see. We have one of the most dynamic stories in the country, and we're only starting to tell it. And I hope you feel the same way. I won't go too much into this slide here, as this information is located on our website, and you can get the same information. But I just want to make one comment on our team. And one thing we all have in common, each of us have a skill set to ramp up companies quickly, manage and overcome challenges effectively, operate in regulated environments, remain focused, and always keep our customer and products in the forefront of everything we do. Now, I've seen in being with a lot of cannabis companies and work with people in this space, and I can say without a doubt that we have one of the best teams in our industry. So with that, I thank you for your time. I will now try and answer as many questions and answers as time allows. And if I don't get to all your questions, please feel free to email me. And the information is located on the slide and our website. Email address, ir@Experian Wellness. I will answer every question if I can't get to it today. And with that, I thank you for your time. I'll turn it back over to our host.
Thank you, Jarrett. Great presentation, very thorough. So thorough that we only have a few minutes to answer quite a few questions. So we promise to get these questions over to you so you could answer them directly to our viewers. For the amount of time we have, let's talk a little bit about the Canadian premium market. How big is it, and how much are you trying to capture? And is there not already an oversupply of cannabis and inventory in Canada? What are your thoughts on that?
Sure. Great question. Thanks, Anna. There might be a bit of a stigma that the Canadian market is quite small compared to the U.S., but there is a significant amount of revenue that does occur here. Coming out of 2020, the Canadian industry did about $2.6 billion in sales, and we're annualized to do about $4 billion coming out of our last quarter throughout 2021. So we know that out of that $4 billion, 60% of that is flower. And so we consider the premium and super premium market about 20% of that $4.5 billion. So that translates to about a $800 million market. And our goal, quite frankly, is to capture about 10 to 20% of that market. So when I said we can ramp this company up to about $100 million, that translates to about a 20% ownership in the premium space off those annual numbers. And I believe, we have the ability to aggressively go after the premium space and continue to grow in there. As for the inventories, you're correct. We do hear a lot of stories that there might have been some overcapacity in the Canadian market. And without a doubt, there is an oversupply of what I would call, broad acreage cannabis supply. And that is where you hear these companies have millions and millions of square feet of greenhouse or outdoor grow. And they are actually producing product and stocking inventory on that because there's not a direct market for that inventory. I can assure you there is a market for premium cannabis products. I answer this a little bit by thinking back a little bit of how this industry was built. The cannabis market is not a new industry, and it was built on thousands upon the thousands of black market growers who were independent and taking care of what they did. And they produced something that they were proud of and high premium quality. And now you want to translate that into broad acreage commercials, really hard to kind of get that user to switch. Therefore, our model kind of relates to that. We're actually leveraging the same thing that it was built on. We're leveraging a lot of small independent growers and bringing that to market. We're just kind of translating something that's already been done. And I believe without a doubt that we'll be able to capture market share with that quicker than anyone. So I hope that kind of answers your first kind of couple of questions. And in fact, I'll go a little bit further. Our model, in fact, protects us a little bit from that inventory supply. We can ramp up and down and pick and choose what we want. We're not overproducing unsellable products. Our model actually divests us and protects us from those type of situations.
Okay, thank you for that answer. Last last question, a few questions in it. Are you planning to uplist to the TXS or NASDAQ? And do you have any plans to go to the US, merge, or acquire?
Yeah, very popular question for sure. Without a doubt, we know the U.S. market is going to be the largest cannabis company in the world. Cannabis market. We know a lot of states are starting to flip into their own type of legalization. So we are not blind in looking at that market closely. In our short term, for sure, we are trying to capitalize on our domestic market, maximizing everything we can out of this, and starting to build maybe a foreign brand strategy. And what that means is I'm already starting to get calls from U.S. companies that may want to introduce our brand into the United States. As we're getting well known as being the best in Canada, they want to bring that into the U.S. and leverage that as a way for us to enter. We're also getting calls from other companies that ask if we can do something similar, i.e. kind of franchise what we're doing here and do those at state levels. So as we get more into those conversations, and if things come out of that and they become material, we will let the market know. But we're just starting to flesh out those conversations. But by no means do we ignore the opportunities in the U.S. And some things are starting to come across our table that we're starting to look at. And as for the uptick, yes, we are on the TSXV. We're the tier 1, and our next leap would be on the TSX or NASDAQ. So as the company qualifies in terms of revenues, stock price, and our cap size, and those opportunities come available, we will look at continuing to uptick our company.
All right, Jarrett, we have a lot more questions for you, but our time is up. So we hope that you join us again on another conference in the future. And we really enjoyed this presentation and look forward to learning about your emerging growth in this sector. Thank you for your time.
Thanks, Anna, and thanks, guys. Appreciate the time, and I will be back.
Okay, looking forward to it. All right, everyone, as we move to our next presenter, you're going to experience a black screen for just a moment. Stay with us. We're going to be right back. And remember, if you're on that Apple device, click the play button to launch the next live presentation. We'll be back shortly.